What's going on, guys? Today we've got an excellent episode with John Pompliano. That's right, Johnny Jets is back, and it's a great conversation. In this one, we talk about what's going on with the macro environment, inflation, why is DOGE waving the white flag? What about Bitcoin, the Bitcoin conference, all the Bitcoin treasury companies, and how I think about learning from the past and taking timeless investing principles, but applying them to brand new places, both in industries and in your portfolio. We do our best to unpack what's happening in the world and also how it's going to impact your personal portfolio. So I hope you enjoy this conversation with John Pompliano. All right, John, what's the first topic? What you got for us?
What's going on? All right, let's talk about Bitcoin. 110,000. The Bitcoin crowd seems to be extremely excited about the price movement recently. We have the Bitcoin conference coming up here in Vegas this week. What are your thoughts? Where are we within this cycle and within this calendar year for Bitcoin?
Classic Bitcoin price movement before the Bitcoin conference. So if you think, coming up on a new all-time high, we're knocking on the door, break through, kind of chill right around that all-time high price. And people are excited because the Bitcoin conference is going on. David Bailey, BTC Inc., they do a fantastic job every year. I've read that 30,000 people, 30,000 people are headed to Vegas, and they're all going to be there. I saw Peter Schiff. He had his nice little booth set up. He complained that everyone else had nicer booths than him. It's because gold price hasn't kept up with Bitcoin over the last decade. But I do think that, one, there is a kind of evolution of the speaker set. You obviously have the hardcore Bitcoiners, people who've been around for, a decade plus. You've got a lot of finance folks that maybe otherwise wouldn't have gone to the Bitcoin conference, 5, 6, 7 years ago. And you got a lot of politicians and kind of people within the political realm that are going to the Bitcoin conference as well. And so I think that really the Bitcoin conference today is Bitcoin is just maturing. It's kind of growing up, which is a good sign for Bitcoin. It means that Bitcoin is being adopted by these new people, new cohorts, larger pools of capital, et cetera. And so naturally, Bitcoin's price is up. Now, I do think, though, that there's also this belief that Bitcoin has gone from a contrarian asset to a consensus asset. And part of that, you can see it with Wall Street now embracing it. But I think that's always a really important part. Everyone knows that, doing something different in investing is really important, and being right is really important, right? If you do something different, but you're wrong, then you're just a dummy. Like, you're just wrong and you lose money. But if you do something different and you're right, that's where potential returns can be. But another part of that equation that usually gets left out of the conversation is you need an idea to go from contrarian to consensus, because you need everyone else to eventually see what you saw early. And I think that's really what Bitcoiners are experiencing now, is when you were buying Bitcoin, 5 years ago, 10 years ago, what you saw were a lot of folks who were saying, that's crazy. Why would you put your money in that thing? It's for drug dealers or criminals, or the government's going to shut it down, or it wastes too much electricity, or whatever the thing was that they got scared away by. Well, the people who were buying Bitcoin, whether you were dollar cost averaging or whatever you were doing, now that went from a contrarian thing to everyone else is like, well, I need some Bitcoin too. And so that shift from contrarian to consensus is really important. I think that also leads to kind of the higher price point, is because it's kind of like the meme, hey, the water's warm, come on in, right? Is the water was cold 5 years ago, 10 years ago. Now it's warm. Now everyone's like ready to rock and roll, and they're going to come into to Bitcoin. So I think you're starting to see that in a major way.
How much of this is price action? Hey, look, price is going up. I want to be involved. It was contrarian. Now it's consensus. And the reason that the price is going up is because it's becoming more of a consensus idea versus, hey, the technology, what people are building on it is super exciting, right? Like, why are 30,000 people going to the conference when last year when the price was down, not 30,000 people went?
Yeah, well, I think there's a couple of things. So price in relationship to value is always a chicken or an egg, right? Does the network become more valuable and the price goes up, or does the price go up and the network becomes more valuable? I would argue that one aspect or framework that I use is Bitcoin does not have a centralized executive team. It doesn't have a board of directors. It doesn't have a marketing budget. It doesn't have, annual earnings reports. It doesn't have these plans that are laid out for folks, right? It is this decentralized network. And so the quote unquote marketing campaign is the price. And you see this, right? As the price goes up, what happens? People start to get more excited because they're holding Bitcoin. They start telling their friends. Their friends start asking them about it. The word of mouth starts to spread among individuals. On top of that, you then get the media starting to write articles or do interviews or podcasts or whatever. So now you've got individual word of mouth spreading. You've got the media megaphones propagating the message on a broader basis. And then you have things like institutions or others who are saying, hey, the trade is working. And so they start to get this confirmatory kind of feedback from the market. And so they say, oh, I bought a little bit, it's working. Good investors, they press their winners hardest, right? So they're going to go put more capital into the trade. And so I think that when you look at those three things, it really is the price is the marketing campaign. Now, of course, the way I usually describe this is as price is going up, more people are coming in. Naturally, more capital is coming in that's leaving. So it's pushing the price further. Then we, at some point, will get overvalued, right? Or the price will go up too much. And so when that occurs, what will happen is the price will start to try to correct. It'll try to find some equilibrium. Now, some people will have bought Bitcoin on the way up. They'll have learned about Bitcoin. They'll become kind of these hardened, long-term holders, and they will hold Bitcoin regardless of what happens with the price. But a lot of people, they're going to come into Bitcoin as a get-rich-quick scheme towards the end of that bull market when the price is really kind of running. And when they come in, they're going to, within a month, 2 months, 3 months, the price is going to correct, and they're going to basically now be underwater on their Bitcoin. Some of those people will continue to hold. A lot of those people, though, will sell and say, I'm never touching Bitcoin again. No different than if you have a mobile app and you run a marketing campaign and 100 people sign up. Well, if all of a sudden 100 people signed up, how many of them are still around a month from now? Maybe 30 of them, right? So a 30% retention rate after 1 month. Great. Well, if you then run another marketing campaign for 100 people and you only are left with 30 at the end of that next month, well, you only have 60 total users. You had 30 after the first month, 30 after the second month. That's your retention rate. The 70 that are leaving from every single marketing campaign, that's the equivalent of the Bitcoiners who are buying at the top of the market. And when it corrects, they just say, I'm out of here. I don't understand Bitcoin. I was here for get rich quick. I'm losing money. I don't want anything to do with this. And so I think that price is a marketing campaign, but the steeper the price acceleration, the better it is at marketing. And so I always get very nervous towards the ends of these cycles because what you see is a lot of people coming in who don't understand it, who aren't going to be long-term holders, and they're likely to get burnt. And so the best thing I've found is just like any timeless investing principle, just dollar cost average into a great asset over a long period of time. And it doesn't matter if the price is up or down or sideways, just keep dollar cost averaging. And over time, you get this nice, beautiful blended thing. And if you hold for a long enough period of time, pretty much everyone who's bought in the last 4 years, pretty much anyone who has bought Bitcoin at almost any time in its history and held till today is in profit. Right. And that'll continue to be true over the long run. And so just let the market work for you rather than trying to outsmart the market.
Did you see, I saw on X that someone has leverage on Bitcoin where it could be liquidated at about 105,000. What are your thoughts about using leverage and just is it propping up the market versus is it real sustainable price run that we're seeing?
I saw the gentleman who's doing this. I think his name's James Wynn. I do not have the stomach nor the cojones to be out there with hundreds of millions of dollars of leverage, $1 billion, whatever, some crazy number. Obviously, that magnifies moves in an asset. And so if you're long and with a lot of leverage and it goes up, then great, you're going to make money. The same is true on the other side. And so I think it is, a very risky game. It's not a game I play. But hey, if that's your game, maybe you've got an edge or some sort of competitive advantage, knock yourself out, right? People should be free to do what they want with their money. With that said, I've been loosely following. I think he was up at one point, on a P&L basis, $85 million. That's life-changing money for pretty much almost anyone in the world. And he, couldn't get away from the table. And so I think he's back down closer to flat on his P&L. Now, again, if that's your game and you're used to wild swings, go talk to somebody who goes to Vegas. I'm like, I had some epic runs and I had some, absolute heaters that ended in sorrow. But on a net basis, I'm up or something like that, right? Here, I don't know what the rest of his P&L looks like. I don't know what other trades he did, but on this specific kind of 2-3 week run, it seems like he's kind of flat. And so in a weird way, maybe it's just entertainment for him, right? Maybe he's just really excited. But being up $85 million and then going back down to flat is probably a tough pill to swallow. I don't care how much money you got. People would rather have the 85 than the 0.
100%. Let's talk about another Bitcoin buyer, which is DJT. They announced that they're going to buy $2.53 billion worth of Bitcoin. What are your thoughts around Trump's organization, or at least that DJT entity, buying more Bitcoin and then doing it in such a large volume amount?
Yeah, look, I think that anytime that you have a company where the stock is trading at a very high premium to what would be considered book value, then it is the duty of that executive team to figure out how to sell shares and raise capital, right? Any company, I mean, Warren Buffett, right? If we're overvalued, we should be raising capital. If we're undervalued, we should be buying back shares. That's kind of a traditional capital market exercise. I think there's a lot of people who look at that company in particular. I've never talked to the team there or anything, but just from what I read online, it seems pretty overvalued. Given what their financial performance is. Now, there's reasons for that. There's obviously a very kind of engaged shareholder base, like all the things that people will analyze. But if you just look at how much revenue, how much profit, what's the market cap, big gap, raise capital, right? So like it's a very rational thing to do. Now, raising capital, you can do a lot of different things. You can go buy companies, you can reinvest in your business, you can go buy Bitcoin, whatever. And so it seems like from the report's going to buy Bitcoin. And so if you go and you buy $2.5 billion worth of Bitcoin, my guess is that that's probably over a long period of time, as long as you hold and you don't do anything crazy, it'll be worth more in the future. And so I think that that's what you're starting to see a lot of folks say to themselves is, wait a second, if I can use the public capital markets, I can raise capital and I can then deploy it into an asset that seems to be very resilient and long-term seems to be very attractive. What is the difference between if I said to you, hey, they went and they raised capital and they're buying a business, the business has no cash flow, right? It's not losing money though either, but it continues to compound its equity value at, 60% year over year. And it's done that for a decade. Well, that's pretty interesting. Even if it comes down to 30%, it's probably still pretty attractive. Can we beat that hurdle rate, right? Can we do better than 30, 40, 50, 60% compound annual growth rate? That's really hard to do. And so I think that's what you're seeing a lot of these public companies go through. Now, of course, this is going to get a lot of attention because of the relationship or correlation with Trump and his name. And so I'm not clear on what his actual ownership is or his relationship, whatever. I'm assuming he owns equity. But I'm not sure also like how involved he is in the management decisions. Like, is he calling and he's like, in the Big Short, he's like, buy, right? I don't know. He was tweeting buy, right? To the people, and was eerily accurate in doing that. It helps if you can tweet buy and then strike a deal and announce it a couple hours later. But I think that it's, again, it will get a lot of attention, but this is just kind of a rational position for a company like that to do. But also I think that a lot of people in the market, again, I keep saying, if you can't beat it, you got to buy it, right? And I think that that has been true of the S&P 500 for a long time. People said, hey, if you can't beat it, you got to buy it, right? Okay, well, same thing here. I think for this whole new generation, kind of the internet age, this is the benchmark. And you're going to continue to see people say, hey, if I can't beat it, then let me go and put some on the balance sheet.
At what point does that capitulate though? And like people are like, okay, like I have to buy Bitcoin, because it still is a contrarian idea for most people and for most institutions. So like there is a tipping point there, right? If it goes on another 20-year bull run where we're up another 1,000,000% over the next 20 years, like people are, is that the new benchmark? And like, when is that seen as the new benchmark versus, traditional called ETFs, S&P, VOO?
Well, let's flip this a little bit and talk about it from a different perspective, which is, what's the risk here? Today's episode is brought to you by my partner, Bitwise, the global crypto asset manager. Bitwise has $10 billion in client assets, a team of 100 plus people, and more than 30 crypto products. One more thing, they've also got one of the best weekly newsletters in crypto. I say that as someone who's no stranger to newsletters. Take it from me. Bitwise's weekly CIO memo is dynamite. The weekly CIO memo is written by Matt Hogan, one of the best minds in the business. Matt has a knack for seeing the crypto stories that people are missing or digging a level deeper on things like the strategic reserve, corporate Bitcoin buying, or crypto price predictions. I highly recommend it. Matt's got some really smart and bold takes and a lot of wit. And the memo takes just 5 minutes to read each week. So head over to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo and check it out for yourself. The Bitwise Weekly CIO Memo. Hot takes on crypto's biggest stories. And always, of course, carefully consider the extreme risks associated with crypto. Today's episode is brought to you by Zappo Bank, where eligible members can unlock the power of Bitcoin without selling it. Need cash fast? With Zappo Bank's Bitcoin-backed loans, you can access 40% of your Bitcoin's value, borrowing as much as $1 million for a full year with low interest rates, zero fees, and no early repayment fees either. Now, here's the best part. You keep your Bitcoin, meaning you get to watch your holdings grow as the price of Bitcoin increases. Whether you're looking to buy a house, fund your child's education, or seize an exciting investment opportunity, these loans give you the flexibility to access cash without selling your Bitcoin. Unlike traditional loans, Zappo Bank's Bitcoin-backed loans have no minimum repayments, no early repayment penalties, and the flexibility to settle your loan in USD or Bitcoin whenever it suits you. It's liquidity entirely on your terms. Zappo understands the unique needs of Bitcoin holders. That's why they have developed a product designed specifically for you. With over a decade of experience in the Bitcoin space, Zappo Bank has been a trusted partner for those looking to make the most of their Bitcoin while keeping it safe. Your Bitcoin stays safe in your vault, untouched, never lent out, and secured in a global network of military-grade bunkers with cutting-edge security technology. Head to zappobank.com/pomp to learn more. That's XAPOBANK.com/pomp. Go check them out at zappobank.com/pomp today. Nobody wants to talk about the risks, right? I do believe that a number of these companies are going to get over levered in a way where they are going to basically spit back out the Bitcoin. So you think about it, they're all sucking in the Bitcoin, right? But there's leverage. And so people do all kinds of calculations and they'll say, we need the Bitcoin price to go to X and then we would be in trouble, but X is a really low number. Or they'll say, our leverage ratio right now is only, 5% or 10%, whatever, right? People are way smarter than me are analyzing this stuff. All I know is I'm a pretty simple guy. If you have an asset that is highly volatile and in history multiple times has drawn down 80, 85%, and there's leverage involved, at some point over the next 3 to 4 years, dead bodies are going to float to the water, right? They're going to float to the top of the water there. Who is it going to be? I don't know. Somebody smarter than me will figure that out. How is it going to happen? I don't know. Somebody that's smarter than me is going to figure it out. But what I do know is if you are going to do this, you better do it with a minimal amount of leverage because that is ultimately the safe way to do it. Now, of course, it's like anything. If I tell you, hey, we can earn 5%, somebody else shows up and say, hey, we can earn 6%. Somebody else says, I can earn 10, I can earn 15, I can earn 20. Where's the line? We don't know. But I do think that being prudent in the public markets with this type of strategy will be a very strong, positive, kind of accretive thing for shareholders. But there will be companies that take it too far. They get over levered. They become undisciplined. They don't know how some of the instruments that they're using actually work. And that's where there will be some issues. So I don't know who it ends up being. I kind of think of it like if we're all walking across a field and there's some landmines planted. At the end of the field is the next bull market. Who's going to make it, right? My guess is it's not going to be 100% of people. But also, look, I think that the public markets also bring a lot of scrutiny. One of the things that people don't give credit to the public markets is the public markets are pretty good about sniffing out kind of things that don't work, right? If you remember, WeWork, when they got their S1, they put it, public markets basically rejected it. It said, you ain't bringing this here at that valuation, et cetera. If you go and you look at, I saw my friend Austin Reef. He's retired right now, so he's got a lot of free time on his hands.
Co-founder of Morning Brew.
Yeah, he's on Google Finance, just Googling every company he could think of, I guess, because he was showing, Rent the Runway is down like sub $25 million market cap. Allbirds down, whatever, significantly, $30-40 million market cap. And all these brands that really came from the last, decade or so got to the public markets and just got hammered. Now, some of them are probably getting hammered on, in a way that isn't fair to them. But a lot of them just weren't that great of companies, right? And so you can build a great product, not be a good company. You can, have all kinds of issues around capitalizing your business or the returns that you drive, whatever. So I just think that public markets in general are very, very, very good at scrutinizing companies. And I do think that the efficient market hypothesis is nonsense. I think there's a lot of asymmetry that ends up being available in public markets at certain times. But over the long run, usually public markets will get it right. And I think that that's why you continue to see certain companies do incredibly well in the public markets and other companies basically just get, chewed up and spit out. And, let's see what happens with these Bitcoin companies. But right now, the market's very excited and they think that this is a strategy that is going to deliver at least short-term shareholder returns. And so far, they haven't been wrong.
Correct. Let's talk about public markets. And I think a big driver of the volatility that we have seen is obviously what's going on with the government today, both with DOGE and just kind of like, what are they thinking about? Are we just going to keep printing money, or is there no balanced budget and we're just going to continue to print and asset prices will continue to go up over a long period of time? Is that kind of what your consensus is?
Well, let's take a step back here for a second, right? So I think there's a lot of folks who were very excited about the current administration going into the White House. Now, if you remember, I called out throughout the entire campaign season over and over and over and over and over and over again that it was a shame that neither candidate was promising to balance the budget. And I said to myself, it used to be during my adult lifetime, you pretended. I promise I'm going to, balance the budget. Yeah, I'm going to give it a good try, whatever. You get in office, you don't do it. So on one hand, I was like, well, at least they're not lying to us on this one, right? They know they can't balance the budget. On the other hand, like, at least pretend, right? At least pretend you care. So when Trump got into office and he started talking about balancing the budget, I actually got really excited about that. I said, man, he's going to take a run at this. Maybe he actually didn't talk about it on the campaign trail because he knew that no one was going to believe him. But now that he's in and he's got this mandate and this landslide victory, like he can go and he can really make a lot of change. And then he was like, I'm going to recruit an all-star team. I got Elon Musk, the slasher of waste in all these companies. He's going to come in and Elon's going to bring all the super genius kids and he's going to bring, the co-founder of Airbnb and he's going to bring that. And I was like, dude, let's go. Silicon Valley's going to Washington and they're bringing their scissors and we're just going to cut all these things. So it's exciting. And the other thing that they did, which I thought was really important, is they essentially figured out how to make it a high status thing to go work in the government. Mm-hmm. How long have you heard me say that none of my smartest friends want to go work in the government? That changed over the last, 12 months. A lot of my smartest friends went to go work in the government and also wanted to go work in the government. So I think that was like a very new thing that happened. Fast forward, now we're in May. They got into office in January. White flags out. I hate to see it. I don't like it. White flags are out. And my assessment of what has happened is that the DOGE and cost-cutting measures ran into two things. One is the brick wall of bureaucracy. It's just like, it's a blob. It's a faceless, big brick wall of bureaucracy. There is no thing you can't get to it, right? And so the blob continues to win. It's like Bubble Boy. Remember that movie?
Yeah.
Right? It's like we put the government spending in this big bubble thing. Nothing can get in. You got a biological attack, not getting in. You got cost cutting is not getting it. Just whatever you try,
you're going to run into a roadblock.
Bubble Boy is protected, right? The budget is protected. The other thing they ran into is they ran into the system. Now, the bureaucracy, to be clear, is not only the politicians. Politicians, do you remember the videos of them showing up outside of the government buildings demanding to like see Elon?
Yeah.
Or being like, what do you mean you're going to cut the whatever? And these guys were just tweeting like absurd things every day. It got to the point they were tweeting things. You're like, that can't be true. There's no way that nobody with half a brain previously allowed that to happen. And then it comes out and it's like, that is true. Like these people are just blowing cash all over the place. And a lot of it was waste, abuse, fraud, I think was the terminology that the administration used. I would argue there's a lot of people on the internet who were like, you should put that in the translator on Google Translate and actually translate to corruption. Whatever words you want to use, that was what was happening there. But they also got fought by the media at every single step. And so what we had was a part of the equation or part of the conversation that did not have the American people's best interest at heart. Instead, what they said was anything that our political opponent does, we are going to fight back against. And whether people like it or not, the media is very left-leaning, right? There are certainly pockets where people are kind of fair and balanced, or they are, kind of not on either side. One of the terms that I hear reporters use a lot is they call balls and strikes, kind of like an umpire. Some of them do that. A lot of them don't, right? So there's some good ones, obviously. There's plenty that are just like mouthpieces for left-leaning causes, parties, etc.
Right-leaning as well, too, right?
There's some, But definitely the media skews to the left. I think that that's kind of an objective fact. We look at donations, we look at coverage, all this kind of stuff. So again, it's important to have both. I think you want left-leaning, you want right-leaning, you actually want independent, you want kind of a full slate, you want to give people choice, you want to inform people, whatever, right? But if you go look and just objectively look at the coverage, the DOGE effort, the cost-cutting effort got fought every single step of the way. And so instead, if we had a bunch of people sit down and say, hey, what's best for the American people? Cut government spending. Great. Let's do a group exercise. We're all together going to go cut this spending, right? Have the media, have the politicians, have Elon and DOGE, everybody sit down, and that was the objective. I think that we could have made progress. The problem is that multiple people sitting at that table, that wasn't their objective. Their objective was drive clicks, fight against the people they didn't like, claim victory, right? All these other things come into play. And then, of course, there's the incentive of like a lot of these people are benefiting from this stuff, right? And so you say to yourself, okay, well, if people are handing out money, there's a lot of folks interested in that not getting shut off, right? And so I think that was one huge kind of brick wall of bureaucracy, media, and politicians all get put in there. The other hand is the system. And the system, it's kind of like if you got a car, right? It's running low on gas, you got to fill it up. If you don't fill it up, what happens? It stops running, right? Well, have you ever been in a car when it runs out of gas? What does it kind of do? It's like gasping for energy at the end, right? It's gasping for the last couple drops of gasoline that it can use, right? Well, that's basically what started to happen here was they started shutting things off, and all of a sudden you could kind of feel we're running out of gas, right? And so naturally, there's a lot of things in terms of the Federal Reserve, the Treasury, the politicians, the president that said, whoa, hold on a second, I don't want to run out of gas here. And so because of those two things, we've waved the white flag, and all you got to do is just listen to what they say. That's the beauty of, I think, right now in modern politics and modern kind of monetary and fiscal policy. Just listen to what they say. That was true of the Biden administration. That was true of the Trump administration. They went from talking about saving, cutting, waste, abuse, fraud, all the terminology, to now Elon's out there tweeting. He's talking about, I think we got to grow our way out of the problem. Besant, he's on TV. He's talking about we got to grow without increasing the debt, right? Everyone now, it's like a memo went out and everyone's like, stop talking about cutting, start talking about growing. Well, when I hear growth coming from Washington, D.C., what I know comes next is printing. To them, growth is printing. Printing is inflation. If inflation comes, I'll predict it right now, you're going to see headlines. Inflation is going to come back, and it may not go to 8%, 9%, whatever, but maybe it ticks up to 2.5%, 3%, right? 3.5%, whatever the number is. A bunch of these smooth brains on the internet, I think is the right term. They're going to the tariffs, look at the tariffs, right? I'm calling it right now. There's a line in the sand. We change strategies, right? As a country. I don't agree with changing the strategy. I don't like it, but that's what just happened. And so now I'm going from telling you that tariffs are deflationary, which inflation fell off a cliff since December of last year because of all the tariff stuff. Everyone was worried about this economic slowdown, all this stuff. I'm telling you right now, we're going to regime change, and now we're going the other direction. Inflation is going to come back, and it's because they're going to print money. Milton Friedman, famous economist, great guy. What's he say? Inflation is only created in one place, Washington, D.C. If they print money, that leads to inflation. They're going to print a lot of money. Spending bill, hey, party's back on, baby, right?
That's something everyone in government can agree on.
Hell yeah. Listen, if they put a bill in front of you that says we're going to give X dollars to your constituents, who's going to vote against that? Today's episode is brought to you by Bitcoin IRA. Are you a crypto investor with a retirement account but don't have any crypto in your retirement account? Listen up, this is for you. Bitcoin IRA is revolutionizing the way Americans save for retirement by helping smart investors diversify their savings with access to over 75 cryptocurrencies. With world-class customer service, military-grade encryption, and a vertically integrated licensed trust company, it's no wonder more than 200,000 Americans trust Bitcoin IRA to secure their financial future. Get started. It is quick and easy. It takes just 3 minutes to open an account. Once you're set up, their team of IRA specialists will reach out to guide you through every step of the process. Whether you're transferring an IRA from a legacy bank, rolling over an old 401k, or starting fresh with a new contribution, the Bitcoin IRA team is here to help you get access to real crypto in your retirement account. And here is the best part. As a Pomp podcast listener, you can earn up to $1,000 in rewards when you add funds to your account before tax day. Search for Bitcoin IRA in the App Store or visit bitcoinira.com/pomp to join 200,000 Americans on their journey to upgrade their retirement. That's bitcoinira.com/pomp to upgrade your retirement today. What's going on, guys? I hope you're enjoying this episode. Before you continue, I want you to know about a brand new show called From the Desk of Anthony Pompliano. I sit down at my desk every single morning and I explain what I think about current events. It's a great show that hopefully will keep you informed and entertained to a little bit. And so if you go all the way over to the other channel, From the Desk of Anthony Pompliano on YouTube, Rumble, X, and every other platform, From the Desk of Anthony Pompliano is a show that'll keep you informed about all things financial markets, general business, pop culture, and of course, Bitcoin. I'll see you guys over there. Now let's get back into this episode. If they put a bill in front of you that says we're going to give X dollars to your constituents, who's going to vote against that? It takes somebody so principled, so courageous, so strong of a backbone to say, no, I'm not voting for that, right? There are some people who are going to do that, but they're voting no, knowing it ain't going to matter because most people, they're going to take the incentive, right? And so they're going to vote for the bill. And so you got government spending coming. You got the money printer. You hear things like running the economy hot. That's code for money printing. And so what you're going to see here is you're going to see that. And so ultimately it concludes with one simple thing. We're going to go back to this only intelligence test that matters for people in their financial life. Are you a saver or are you an investor? If you're an investor, you're going to be a winner. If you're a saver, you're going to be a loser. Look, I just shoot straight, as blunt as I can put it. If you are sitting there, which something like 50% of Americans are sitting there with no investment assets and you have 100% of your wealth in dollars, you're going to get crushed. I don't want you to get crushed. You don't want to get crushed. I wish the system wasn't built this way. I wish that incentives weren't in place. I wish they weren't going to print money. Everything we could talk about. It ain't going to change the fact that you're going to get crushed if you're sitting with 100% of your wealth sitting in dollars. And that's at least a very big percentage, if not 50% of the country. The other 50%, come on. You see the article in the Wall Street Journal, I think it was, or New York Times talking about how much it costs to go to the Hamptons?
No.
You're going to see a lot.
Sure,
you're going to see a lot more. By the way, it's not what you thought it was.
Hamptons is overrated.
They followed like a group of women that went to the Hamptons. I think they said like the bill was like $3,500. I said, I don't know where y'all going in the Hamptons.
I saw that actually.
Staying at Motel 6, maybe.
That seemed low.
That's what I'm saying. They must have
had one meal the whole weekend.
Yeah, eat one meal. Go to the beach in the public free zone, right? Go to Motel 6. Yeah, $3,500, right? I don't know anybody that is going out there in the way that they were describing their life that spends $3,500. There's gonna be a lot more of that. You're gonna see 2021. That was warm up. That was like going to the batting cage and being like, one day I hope I can go to the big show, right? And you're hitting the 95-mile-an-hour fastball. Nah, we going to the big times now. They print this money because now psychologically people, they've seen it before. They know, right? It's why all recessions have been outlawed in the economy, is because as soon as the central bank sees recession coming, what'd I tell you? Everyone was just talking about recession 3-4 weeks ago. What are they going to do now? Cut interest rates, print money. It's the playbook. Recessions are outlawed and they're going to bring the heat now. And so when they do that, spending, all this stuff is going to push asset prices, going to put liquidity in the market. You're going to see the velocity of money really take up. Business owners, asset owners, those people are going to do really well. So what do they do when they do really well? Get on the planes, get on the trains, get on the yachts, right? Go to the different things, spend money, consume, it's a party. And so I think that's where we're headed back to. And so if you think about investment assets, anything that's liquid and denominated in dollars, probably going to do pretty well. Public stocks going up, Bitcoin going up, gold going up, certain real estate, REITs, things like that going up. If it's liquid and it's denominated in dollars, 5 years from now it's going up, right? And so the question then becomes, well, what about the private market? And my guess is that's also going up because you're going to have more liquidity chasing all this stuff. And so 2020, 2021, go study that. If they print money, remember in April when prices were down 20%? Remember that? Mm-hmm. Everyone was moping around. Everyone was all sad on the internet saying, the recession. People talk about the Great Depression, all this nonsense. You ever seen the meme where that guy stands up in church by himself and he's like the lone voice? And I kept saying all-time highs before the end of the year. Get a cigar ready. We going when that thing hits new all-time highs, right? I'm gonna hit you with the security guard shrug from the Michael Jordan documentary, right? Like I told you, like what do you guys want, right? The faster it falls, the faster it recovers. They're gonna print money. They're never gonna let us get in a recession, and here we go.
I mean, the correlation between M2 money supply and, Bitcoin and pretty much every asset across the board for investors is a positive correlation. We could say that.
If there's more money chasing the same number of goods, well, guess what happens? If there's more money chasing the same number of investment assets, guess what happens? And so that's what that is ultimately what we're watching play out here. This is the only thing that matters in investing. You could be, some genius portfolio manager. You could be at a hedge fund spending billions of dollars, CapEx and OpEx or whatever you want to do. Try to get your computer a little bit closer to the data center, right? Run the fiber optic cable, get your Bloomberg, have 3 Bloomberg, 7 screens, whatever you want. If you don't understand this one thing, people who are literally trading on their phone are going to beat you. Because guess what? Inflation is going to be a structural tailwind for asset prices. And therefore, if you just buy assets and chill, game on.
Let's end on this. So obviously, if there is a influx of new capital into the market, one of the big drivers, I think, of the Bitcoin price, and correct me if I'm wrong, is Bitcoin treasury companies. What is the appetite for Bitcoin treasury companies, and how much can it get diluted over, if the next year we see 1,000 Bitcoin treasury companies come on and they all bought, $10 billion of Bitcoin, obviously there would be some price movement there. But is there an appetite from investors that want that versus just going off and saying, hey, look, let me go buy this asset myself? Because there are some, custody concerns and some other things going on there.
I don't want to get into all the details right now, but, many of the investors who are investing in these things, they're not just buying it for Bitcoin exposure. They can go buy Bitcoin, right? These people are very intelligent. They are very sophisticated. They have a lot of money. And what they're not trying to do is they don't need to make 50x their money. If they can pick up a couple of percentage points here and there on a lot of money, that's good. That's good enough for them, right? And so I will give you maybe one example that would be helpful. There's a lot of people who are investing in these things as a way to arb the premiums. People smart, they can figure out how to do it. But if something has $1 worth of Bitcoin, but it's trading at $2, well, there's $1 premium. You think people aren't trying to lock in that $1 premium? Say, I want no risk. I want to be neutral exposure to the asset, and I just want to clip that $1 premium. Now you can see why so much capital is pouring in, right? That's just one of many ways that people are playing this. And so, yes, are people buying Bitcoin? Of course, right? They want exposure, all this stuff. But the really big pools of capital, the reason why this trade is so hot right now has much more to do with people figuring out different ways to kind of risk mitigated drive returns than just like, oh, I can't figure out how to buy Bitcoin, so let me go buy it over here, right?
Yeah. I feel bad for the day traders right now.
Why?
Just so much volatility, so much uncertainty.
They need volatility.
Yeah. If
you're a day trader, if you're like a legit, not like hey, I look at the market, but if you're like a legit day trader, you need the volatility, right? If it just goes sideways every day, then you don't make any money, right? So don't feel bad for them. They're thankful for it. I think the people who hopefully are, you send this stuff to your friends, right? Send this video, explain to people, listen, you got to understand what you're buying. That's true of every asset class. Go and figure out if you're going to buy a stock, explain it to me. Can you explain the stock to me better than I can explain it to you? That's probably a pretty good spot to start with. Why are you buying this thing, right? I always love the idea of like, if you're going to buy something and not hold it for, 2, 3, 5, 10, whatever your time frame is, then why buy it for 5 minutes, right? All these different things. It just goes back to like timeless investing principles do not change. You can take those timeless investing principles if you are smart, take the time to learn them, implement them, et cetera, to new industries. But the timeless investing principles, they're timeless for a reason. Yeah. And so I think that that's a huge piece of this is if you think that you're the next Warren Buffett or George Soros or Steve Cohen or whatever, well, one odds, just given the probability, you're not, right? But somebody is, right? Okay, well, take the things to learn from these people and apply it in new areas, right? There's a reason why they've been successful. Don't just, I always laugh when I hear people be like, oh, they're dumb. Like, well, objectively, they're not dumb, right? Actually, they're objectively smart. You may not like what they do. You may think that you can do something better or different or whatever, but learn from them and then make it your own. I think that's a huge piece of this is people want to operate in a black and white world, but like the gray area is Can you explain to someone, why was Warren Buffett successful? Why was Steve Cohen successful? Why was Paul Tudor Jones or Stanley Druckenmiller? Like, just go through all of these folks, take the lessons from every single one of them, and then say, from these lessons combined with what I am uniquely good at or interested in, how do I apply it to a new area? And then that is kind of, that's your domain. Go play in that domain. And I just think that not enough people are doing that yet. And so I hope that people who come into Bitcoin understand Bitcoin. Go read the white paper. There's a gazillion hours of podcasts or articles to read or tweets or whatever. Like, go learn. As you learn, implement best timeless investing principles, and you'll be fine. Just let the market do its thing.
There's 1,500 episodes of the Pomp podcast that you could go listen to.
I don't know if you want to do that. That would take a long time, and you'd probably get tired of hearing my voice. But
2x speed.
That's true. That's true.
Well, you talk a little fast for 2x speed.
I probably.
Yeah.
Sorry. By the way, people always say when they meet me in person, they're like, "Oh, you talk faster in person." I try really hard to slow down whenever a microphone's in front of me. But, it's not really that easy because I could talk like this and then people are like, wait, what the hell? He's talking so fast. I'm like, well, I got a lot to say. And, like, let's just be more efficient here. There's nothing worse than sitting down in a meeting and the person starts talking.
Dragging it on.
Like this. You're like, oh, man, I love you, but I ain't got time for this. We got to hurry up. Like, well, just tell me to spit it out. Let's go. What's the thing that you got to do? And so, it is what it is.
All right. Appreciate you.
All right. Thanks, everyone, for watching. Talk to you guys next time.